Ladies and gentlemen, this is getting extreme. And we're talking about the cost of borrow fees. Interactive Brokers now has almost 1,000% cost to borrow fees. This comes as AMC stock is down 1% here on the day. It really hasn't done much this week, all things considered. This weekend and next week are going to be potentially very big weeks, big time frames for AMC, as we are expecting some form of news from the courts. So let's get into everything happening today with AMC stock, what to expect, as well as the broad markets, because some encouraging signs there with the data that we got this morning. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Let me know down below in the comment section as well if you guys want some merch, if put together a little store down there, see what we can do with some designs. Would that be something that you are interested in? Let me know down below in the comment section so you can kind of rock your AMC gear wherever you go. Maybe start a conversation or two, teach someone about fraud, corruption, manipulation, and sweet tendies. So let's go ahead and get into first things first, what's happening with AMC stock today. Stock's down 1%. Not a surprise. The markets are split. It's almost 50-50, but between stocks going higher and stocks going lower in the Russell 2000, S&P, Dow, and the NASDAQ. It's almost 50-50 out there. So AMC is on the red side, right? Just simplest way to put it. Now, this is likely due to some of the extreme option orders that we are seeing today. Again, a lot of option trades, not as many of those $9 million trades or $5 million trades that we were seeing yesterday, and you guys can see those right here, some huge trades, but you're seeing a lot of $200,000 to $400,000 trades that are having that same effect of pushing down AMC. And I mean, look at it, $17 put. Like, what is the reason for that? Why are you buying a $17 put? That doesn't even make a whole lot of logical sense, unless they're maybe trying to cover up something, trying to hide a position or two, in which we spoke on that in the last video. Nonetheless, let's briefly get into what's happening in the markets today, because really it's all about the economic data. So when we look at the calendar, the non-farm payrolls came in at 209,000 jobs. You were expecting around 225,000 jobs. This is positive because it's not higher than expectations. It's not super low, right? There's a chance that one of these non-farm payroll reports, you're going to get 100,000 job ads, and it's way worse than expectations, and the markets are going to freak out on that. On one hand, that's positive for the Fed, but on the other hand, that's a sign that maybe we are going into a recession quickly. If obviously the job ads keep coming in over 300,000, as we've seen for months now, that's also not going to be good for the Fed. So you really want to see this data come in line with expectations or slightly below expectations every non-farm payroll report that we get from now into the foreseeable future. And that's exactly what happened. It came in low, but not too low where people are questioning if we're heading into recession or not. Right? That's the bottom line. The unemployment rate was expected to come in at 3.6%. It came in at 3.6%. Both of these were positive because they weren't too good, nor were they too bad. So that's kind of the main story of the day today. What that's actually doing for the markets is it's dropping the 2-year Treasury yield by about 7 basis points. And you've seen after the data yesterday with the ADP employment change, these 2-year bond yields hit a new high of this cycle. You're still at a new high of this cycle, but it's not continuing higher today. It's coming down a little bit. That is good for borrowing cost, right? That is good for the economy the lower these yields stay, because I've talked about this before. It's essentially, you can think about it like this, if this sounds confusing. If you're going to get almost 5% on a 2-year Treasury, what do you think a lender is going to charge when you go to get a vehicle or buy a house, I mean, you're not a risk-free borrower. There's some degree of risk when you are lending out your money to an individual. 6, 7, 8%, maybe higher than that. So that's why the bond yields are important. If the 2-year treasury or the 10-year treasury are paying you 1% or 0.5% like they were in 2020 and 2021, well, that's where you get a 2% mortgage, right? I personally got a 2.25% mortgage. It was the lowest that we had seen at the time, and it's the lowest that we'll probably see for a while. They would have never given me that if you could get a 5% yield on a 2-year treasury, right? So that's why the bond yields are important. 10-year treasury is flat on the day, not at a new high of the cycle, but still quite high, as the markets are now pricing in at least 2 more rate hikes and for rate cuts further down the line. So that's essentially what's happening today in the markets. That is what is causing markets to actually go higher here today. NASDAQ up about 0.7%, S&P up about 0.5%, and the Dow is up about 0.1%. The VIX down 6% on the day, sitting at super depressed levels at 14.5. And the Russell 2000 up almost 2% here on the day. Now, I think if it wasn't for the option activity in AMC would obviously be a lot higher today, right? The Russell is up almost 2%. But this weekend, as well as next week, could be very, very important, because even as soon as this weekend, as soon as here in after hours today, we could get a ruling from the judge. If Morgan decides to, as I expect she will, let this reverse split go through, then you're going to probably rally, right? And again, that's because the markets are they've already priced in the bad news. They've already priced in the dilution and the negative factors of this reverse split, of raising capital, all of that. That's why the stock has fallen. That's why the stock's not at $10 per share and the stock's at $4. You've priced it in. Now, once this actually does get approved, and people are going to be so surprised when this happens, but I mean, we've been saying it for a while, the stock's going to rally. It's simple. As Eric Wold from B. Riley Securities says, the markets are going to look past the negative, and they're going to look and say, hey, AMC is going to be able to raise billions and billions of dollars of capital. There's no chance that they're going to go bankrupt anytime soon. Hopefully pay off a lot of debt and have billions in the bank is preferably what we'll see happen. The valuation changes at that point, because AMC could have over its market cap worth of money in the bank. I mean, as long as AMC is not losing money, then that would help the valuation by quite a bit. Long story short, these are positive fundamentals. And if you're a short seller, I think that means you would want to cover on your short position once there is no short thesis left. And AMC, over the last 2 years now, has been slowly crushing that short thesis as the business has gotten better and better. But the one thing that AMC has not been able to crush in terms of the short thesis is their capital position, is actually getting back to a place of no bankruptcy concerns. Even when AMC had over $1 billion in the bank, almost $2 billion in the bank, they were still losing like $400 million every quarter. It was only a matter of time before they went bankrupt, and that was the logic from the shorts. Well, the loss has narrowed by a lot. You're getting closer to a free cash flow position, likely by the end of this year. Well, put billions of dollars of capital in AMC's bank. I mean, that is going to make for a bullish outcome for the stock. Now, I think that is what the cost to borrow fees are suggesting to us. If we take a look at the cost to borrow fees currently from Interactive Brokers, 947.53%, with 55,000 shares that are currently available to be lent out. 950% from a brokerage like Interactive Brokers that really favors your hedge fund and institutional clients, that's insane. That is wild, okay? We haven't seen 950% cost to borrow fees from Interactive Brokers in a very long time. And this is not a glitch, guys. Earlier in the day today, the first reading we got was 879%. And then it went to 947%. And it's been like that for hours now. This is not a glitch. These are where the numbers actually are. You cannot possibly make a profit when cost to borrow fees are 950% if you are a short. This is going to put and is putting massive upside pressure on shorts to cover on those short positions. Now, cost to borrow average from Ortex says 942.63%. Cost to borrow max is remaining stuck at that 1.06 thousand level. About 1,060% is the current cost to borrow rate. Cost to borrow average at 1,055% as well. Now, if we look at the live short interest of free float, it says 22.5% with 116.5 million shares that are currently sold short. We're not seeing any new official reports. We're not getting anything that really suggests that's a true number. It might be, but that wouldn't make sense because that would mean some shorts actually covered on the short positions, when in reality, you haven't seen any data or evidence of that happening. So take that with a huge grain of salt. AMC stock is still on the threshold securities list. They really just cannot get a grip. Now, today, you are seeing, again, about 3 times the amount of puts versus calls. And the put positions are very large. So the call positions that you see, like right here, is a July 14th 50-cent call for $183,000 and a July 14th 50-cent call for $48,000. Another $63,000 50-cent call for July 21st, right? The calls that you are seeing are very small positions relative to the large put positions. So that's why, you're seeing such a high amount of puts and dollars heading into puts recently, and it's really not, those calls don't have no effect on AMC stock. Now, if you look at the put to call ratio, look at this little chart over here. Hopefully you guys can see this pretty well. And actually, let's go ahead and blow up the chart. That works. This is the put to call ratio in AMC stock. Well, what happened? Ever since essentially the proposition, the reverse split, actually happened, you went from seeing about twice the amount of calls on AMC stock for compared to the puts to triple the puts now compared to the calls. And this spike happened as soon as this proposition was proposed. This reverse split to raise capital. You went from a put to call ratio of 0.63 to where we currently sit at 1.62. Look at this in context. Everyone is bearish. Guys, don't be fooled by this. Everyone is bearish. This is not the time to be bearish yourselves. The time to be bearish yourselves maybe was when AMC was $8 per share during some of these rallies. Maybe that was the time to be slightly more defensive. I personally don't think it's right now when you have a put to call ratio this high. It's likely only to come down from here, not to go up. And that's going to mean more calls and less puts heading into AMC stock. So when you actually put that out on a chart, it looks wild. Even during the rally in June, you were nowhere close to where we are now on a put to call ratio basis. You were only ever at about 1. You're 50% higher than that today. So I think, long story short, we're in for some bullishness because everyone is just so bearish. Now, if we look at the Stonko tracker data in regards to the news that we're going to get from the courts either this weekend or next week, there's not a lot of option activity, especially for next week. For July 14th, you have 5,000 calls currently in the money, 70,000 calls out the money, 33,000 puts in the money, and you do have 71,000 puts that are out the money. This is very low relative to July 21st, when you have 55,000 calls in the money, 462,000 calls out the money, 380,000 puts in the money, and 465,000 puts that are out the money. Very, very small numbers relative to even the following week. So if you do get a ruling this week, which I expect we will, or potentially even this weekend, that wouldn't surprise me either, you're going to see a flood of, I think, bullish options, and that is going to be a big driving factor of AMC's rally for next week, guys. So there is that. Let's go ahead and take a look at some of the technical signals. And you are actually seeing the yellow line is now above the blue line on the MACD. That is the CCC line crossing above the signal line. That is bullish, although the overall momentum is still negative. You're still in this downtrend as AMC is not above that neutral line, and really it hasn't been above the neutral line since the rally back here in May, but you really don't get above that neutral line all too often. So we'll see if that does change, but in the short term, it looks like AMC could be more bullish rather than not, according to the MACD. And the RSI is at 39.31. It's starting to get back to those oversold levels, in which when we were oversold on the RSI back here on June 23rd and on June 27th, I said that was the time to buy the dip in AMC. If you were going to buy some bullish bets. What happened? The stock rallied 7.5% and proceeded to rally from there another 1% or so the next day, literally the next day after we pointed that out. So pretty clear to see from here. Things are so negative, they're bullish. Now, as far as the 50-day moving average, that's the next level of resistance that I would watch coming into this next week. That is sitting at $4.87 per share, 100-day moving average at $5.05 per share, and that 200-day moving average at $5.60 per share. I think it's possible, once we do get this announcement from the judge, that you blow past all of these moving averages. I expect a pretty good size rally once this announcement does come out. Now, it wouldn't surprise me if the initial reaction was slightly bearish, up or down 3%, wouldn't surprise me. But I expect the coming days after, potentially next week, you're going to get a digestion, and markets are going to say, hey, this is actually really, really bullish for AMC. We should cover on our short positions. That's the narrative that will start to play out. So that is going to do it for this video. Hopefully you learned something. If you did, hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Most importantly, let me know what you guys think about this information, and if you guys want merch, if that is something you are kind of interested in, showing your support for AMC everywhere you go, let me know down below in the comment section. Nonetheless, thank you guys for watching, and I will see you in the next one.